yesterday there was no support from many of the sectors. No. Today, what did you see?
Well, I think, you know, you mentioned value, and I think that that is what it is. And also the market it's quite encouraging, moving on results and on good news. For instance, big new contract that Murray & Roberts has got. It was positive for the share price. And that, I think, is perhaps a good indicator.
Let's stay on that Murray & Roberts story. Yes. I mean, what is it telling us about where the growth actually is? I mean, this is a contract outside of South Africa.
Yes, yes, and only just outside the border, mind you, but nevertheless, it does say that the future of the big contracting, civil contracting companies and mining contracting companies is outside the border. There are better margins, there are big opportunities there are big infrastructure developments taking place there in the private and public sector, and that's where the aim has to be. Of course, there are higher risks there too, but nevertheless, I think that at least as long as there's an insurance of getting paid on time, each time, that's the way to go.
Certainly. If we can look at some results that came out today. Peregrine, am I saying that correctly?
Yes, indeed.
All right. So, I mean, they seem to be outperforming the rest of their peers. I mean, yesterday we had KD's disappointing results there. What are they getting right?
Well, let's start off by saying, you know what a peregrine is. A peregrine falcon is one of the fastest birds in the air. So whether they've been suddenly made a turnaround, boy, they've done some catching up. And I think it was a bit of a focusing on where their prime operational area is going to be. They've had some new management, top management, and I think that has made a difference. And I think that they've steadily been divesting of those non-core areas. So that is it. Concentrate on their strengths. And that's what they've done. And there's been a big turnaround in that respect. Plus, of course, a big cash flow input on a big property company that they sold.
And then, of course, we had this in our news, Delta Property Fund.
Yes.
You know, the shareholders, the BEE shareholders, essentially taking over that asset management company. I mean, is this indication as to how BEE transactions of the future might look like?
Well, perhaps it's how they should look. You know, after all, it's fulfilling the definition of that function. Whether it'll become more widespread is hard to say. There's not always the capital available for the BE participants to be able to take that much of a company. Obviously, something very special has been devised here and designed here, and maybe that'll be a good example for others to follow. One must hope so.
Certainly. Let's talk Old Mutual.
Yes.
Yesterday the news came out about divesting in the US, selling off some of the businesses there. The share price was up. I still see that's pretty much the picture today.
Yes.
So the market is you know, still reacting to that, essentially.
So they sold about 20% last October of the US asset management company, and they still got the other 80%. Are they going to keep it, or is this going to be an ongoing divestment? We don't know. I don't think they've said that yet, but it does say I think it's an admission that competing in America against Americans with South African design products is a very, very difficult proposition to do, and I think that to get greater participation from those on the home front there is probably a good idea, and maybe let Old Mutual concentrate their investments, their activities, where they have a stronger base.
Yeah, certainly. I mean, just looking at other companies that major moves down here, you've got Telkom, of course, that announcement about the job cuts.
Yes. Well, I think that, you know, that's to be expected. Telkom is seen as perhaps even being bloated with a costly infrastructure, costly workforce, and until the workforce gets the hang of the idea that they can't just be there to collect a paycheck, that it's got to do with productivity too, and there's a connection between these two items, then I think there's going to be ongoing work shedding, not load shedding. we're in that
there we go.
But work shedding, you know, workers being shed, and that's a sign of what's to come. There's no doubt about it. It's the only way the big companies can improve their efficiency ratio.
Let's talk Rand really quickly. Our time is nearly running out here. So the last time I looked, we were sitting at about 12 Rand 34. What is this now? Is this, you know, dollar weakness? Is it domestic factors driving this? It's better than what we nearly hit 1270 the other day.
Yes, but where did it come from? You know, the previous high, weakest point was 1170. It broke through there in that 1170 area, then became a floor for a new range which went all the way up to 1270. That was a big range. And boy, it zoomed up there at a terrific rate. And once again, maybe moved too far, too fast. But, you know, we've had a little bit of good news. As far as emerging markets are concerned, there seems to be a little bit of more stability there. There's home hope that the world economy is going to pick up a little bit of momentum. Lots of littles here, but you know, they make a great size together. And I think all of this is positive, and Fitch didn't downgrade us. Well, it's a negative that was expected to come and didn't. So all of this is a bit of a reaction, and I think that that's, as it affects the JSE, it also affects the currency as some risk capital comes back into the South African environment. I think that is what's happening.
Staying on the rand, Ian, I mean, tomorrow we're looking out for the mining and manufacturing production data. How do you see the rand reacting to this, whichever way it goes?
Whichever way it goes. So I can't help but be nervous about it. You know, just looking at where the business confidence index is, just looking at what's happened. Let's just take the gold sector. You know, just look at the thumping they've been taking in dollar terms regarding the realization of sales of their products. It's very difficult. Perhaps they have made up for it in the depreciating rand value of sales, but I think it's going to be, compare how the base was a year ago with how it is now. I'm not going to get too hopeful about it, but it'll be an important indicator for a big part of the economy.